Okay, welcome back. So we've got the market up 182 points. It's off the highs by a little bit, but good going. 17,713. Jigar Mistry is co-founder at Buoyant Capital. He's joining us right now. Jigar, great to have you here. Thanks very much. What's the new reason for the enthusiasm, Jigar?
Yeah, Prashant. So, I remember the time, markets were 12,003 odd hundred, and we were discussing that, look, it is the highest P that we have seen so far, right, in terms of historical framework. And since then, markets have basically found new and new reasons to keep tiding higher. I think the fundamental thing that we have discussed in the past also is that, a lot of reforms, the multi-year reforms, they have happened, and the market is not, and the Indian economy per se is not the same. So GST, banking reforms, all those take a lot of time to sort of start showing effect. And if you see, a lot of the companies over the last 3-4 quarters have started eating tremendously into the unorganized space. So I think fundamentally things are improving at a level that we haven't seen before, and therefore, sort of getting negative every time around valuations, is a little bit of a difficult situation. But, I wanted to highlight one very important point, which becomes very important at this juncture, which is that, a lot of people focus on timing the market, and therefore, expensive, inexpensive, they try to get in and get out. What we have found, and we have released a very nice study on Friday evening, where we are saying that, essentially your discipline is eating timing for lunch every single time. So let's imagine this situation that you had invested in Nifty at the bottom of 2008, right? That was like 2,800 odd levels. Your CAGR of bulk investment would have been 15.5%. But if you had invested at peak in 2007, which was 6,000, so market has fallen 55%. But if you kept in, discipline in investing, then your returns would have been closer to 13% CAGR. So I think the most important question to focus now is that, while you're approaching the markets at levels which seems, unexpected and probably very high, you should be investing in stocks and businesses which will be happy to buy when they are down 15, 20, 25%. And if you are sort of finding those businesses, then investing, even now seems like a very sensible solution to us.
Jigar, sorry, you're saying that investing at the peak in 2007 or the lows in 2009,
Yes.
over the next 10 years or whatever, till date, the difference in compounded growth would have been 2%, 2 percentage points. Is that what you're saying?
Less than 2 percentage points. Yeah. No, so let's say you managed to buy at the absolute lows of 2008, then index at that point was 2755, right? The holding period return, had you put a bulk money at that point in time, was 15.5%. And if you had sort of bought at the top in 2007, 6,139, and kept on buying every single month, then your holding period return or SIP return would have been 13%. Right? The trick is not so much into sort of identifying the tops and bottoms. The trick is actually to identify businesses when they are, at this juncture where you'll be happy to buy when they're down 15, 20, 25%. That time will come. This time what we are seeing right now is not, it looks very good when you are doing it. Your portfolio returns sound amazing. But at certain point in time, you should not be looking to sell a business that is down 20, 25%. And if you can actually manage to buy more, then, over a period of time, you are going to realize very strong returns.
Interesting data, Jigar. Thanks for highlighting it. I wanted to talk about individual companies as well as sectors. The flavor has been many of these PSU names. So something like an NTPC is up more than 20% in the last 3 weeks. Coal India has rallied 30% in the last 1 month. In the last 1 week itself, names like HPCL have gained about 10%. So PSUs broadly have seen a blockbuster rally. There is a lot of talk about a catch-up rally taking place. The valuations are reasonable, etc. What have you made of the up move, and is there merit in buying them?
Hi, Rima. Yes, of course, there is a lot of merit in buying some of those names. So, you look at the energy security and stock raw material security for a lot of Indian companies. It simply isn't there, right? We are importing close to 180 million odd tons of thermal coal, 50 million tons of coking coal. And therefore, if there is a global disruption, then Coal India can only supply so much in your e-auction market. And I used to track Coal India back in the day, but my knowledge is a little bit dated. But I would assume that almost 70% of the profitability is coming from the e-auction market, which is only 15% of the volumes, or it used to be only 15% of the volumes a few years back. In that scenario, if the e-auction prices are going to go up, then Coal India definitely sounds like a legitimate beneficiary of this. At the same time, a lot of this coal could potentially be diverted to power utilities, and therefore the end users in other segments like the cement or DRI, which is basically secondary steel, they could see some amount of cost pressure. So that's certainly a case there. NTPC, etc., there has always been a case of those being value purchases, and per se, a regulated utility doesn't make that much money, even if power prices globally or in India are up. But, you need reasons to buy something that is very inexpensive. And I think it could be one of those. In terms of, the petchem cycle and the refining margins, our team is reasonably bullish on both of those. So, HP, BP, those names does sound interesting. We have owned BPCL for a very long period of time. I think we continue to own that one even now.
Okay, that's the call on some of these PSUs. Hi, Jigar. Good morning. This is Pavitra. What else do you like in this market? Where do you see value? And are there some stocks which in particular have your attention?
Hi, Pavitra. Good morning. So yes, one sort of theme that we keep discussing is the bank space, where the bank indices have been the worst performer over the last 6 months. The marketing to see how the current quarter number, our assumption, talking at a lot of banks last 2 quarters, as things are not as bad as feared, number one. And number two, quotes have been opened, and the rate of, your house or mortgage sort of being offered up is reasonably high. So my sense is that banking sector post the 2Q and run up to 2Q could be very good. ICICI, SBI, Federal, Kotak, HDFC are the ones that we own. Other than that, 2 or 3 names that we discussed in the last show, I remember, are Fluorochem. That is one name that is very interesting to us. In the reopening side, we like the names like IRCTC, Pokarna, and United Spirits, ABFRL as well. And lastly, in the aluminium space, we like Vedanta. So yeah, those are the few names that we currently have in the fund.
Jigar, thank you very much. Good chat as always. Thanks very much for joining us. The Nifty is up 170, 169.